In the intricate tapestry of global geopolitics and finance, the European Union stands as a monumental experiment in integration. However, the seismic event of Brexit has sent tremors across the continent, revealing fault lines that extend far beyond the British Isles. While the United Kingdom's departure has dominated headlines, astute observers and investors are now turning their attention to other undercurrents of discontent, specifically the nascent but significant movements for Frexit in France and Nexit in the Netherlands. Although the immediate probability of these nations exiting the Union may seem remote compared to the UK's precedent, the underlying drivers of these movements present critical indicators of political risk, economic sentiment, and potential market volatility that warrant a deep analytical dive. Understanding the dynamics of Frexit and Nexit is not merely an academic exercise. It is essential for forecasting the long-term stability of the Eurozone and the strategic allocation of capital within the European market. The Frexit movement in France, while not yet a dominant political force, is a significant barometer of national sentiment, largely championed by far-right parties and certain nationalist political factions. The primary impetus for this movement is a profound dissatisfaction with the European Union's perceived encroachment on French sovereignty and its purported negative effects on the nation's culture and economy. Proponents of Frexit articulate a vision of a France liberated from the regulatory framework of Brussels, able to chart its own course in an increasingly complex global landscape. This perspective is rooted in a fundamental critique of the EU's supranational authority, which they argue has diluted France's unique identity and constrained its economic potential. From an investment perspective, the persistence of these sentiments introduces a layer of political uncertainty. The periodic rise of Frexit rhetoric, especially during election cycles, can trigger market jitters, affecting French equities, government bonds, oats, and the valuation of the euro itself. Investors must therefore monitor the polling numbers of Eurosceptic parties as a key risk indicator, as any significant gain in their support could signal a shift in the political calculus and a potential repricing of French assets. The core arguments underpinning the Frexit movement are multifaceted, touching upon legal, social, and economic domains. At the forefront is the demand for the restitution of national sovereignty. Supporters contend that France's ability to legislate, control its borders, and conduct an independent foreign policy has been severely compromised by its obligations to the EU. They argue that critical decisions affecting the French populace are increasingly made by unelected officials in Brussels, creating a democratic deficit that undermines the authority of the nation-state. This call for regaining legal and political autonomy is a powerful, emotional, and political rallying cry that resonates with a segment of the electorate feeling disenfranchised by globalization and European integration. A closely related and highly contentious issue is migration. Critics of the EU's open border policy, enshrined in the Schengen Agreement, argue that the bloc has failed to manage the influx of migrants effectively. This has become a major security and social concern for many French citizens.
Exit.
Advocates propose that a departure from the EU is the only viable path to regaining full control over national borders, allowing France to implement its own immigration policies tailored to its specific needs and security requirements. The debate over migration is not just a social issue. It has direct economic implications influencing labor markets, social welfare spending, and public sentiment, all of which are crucial factors for assessing a country's long-term economic health and social stability. From an economic standpoint, the Frexit narrative posits that adherence to the Eurozone and the EU's stringent fiscal regulations, such as the Stability and Growth Pact, has been detrimental to the French economy. Opponents argue that the single currency has prevented France from using devaluation as a tool to boost export competitiveness, effectively trapping it in a low-growth environment. They claim that EU regulations, particularly those concerning competition and state aid, have disproportionately burdened French small and medium-sized enterprises (SMEs), which are the backbone of the domestic economy. This economic argument suggests that an independent France, free from the euro and EU fiscal constraints, could pursue more expansionary monetary and fiscal policies to stimulate growth and reduce unemployment. Despite the resonance of these arguments with a notable portion of the French population and the vocal support from prominent political figures like Marine Le Pen and Eric Zemmour, the Frexit movement has not yet achieved mainstream consensus. The majority of France's major political parties, both on the center-right and center-left, remain committed to the European project. Consequently, the actual implementation of Frexit remains a distant prospect, contingent upon a dramatic shift in domestic political dynamics and public opinion. France's role as a founding member and a central pillar of the EU, alongside Germany, makes the institutional and economic hurdles for a potential exit exceptionally high. The intricate entanglement of the French economy with the EU's single market means that a departure would trigger unprecedented economic disruption, a risk that most mainstream politicians and business leaders are unwilling to entertain. Nevertheless, for investors, the Frexit movement serves as a persistent tail risk that cannot be entirely dismissed. Similarly, in the Netherlands, a Nexit movement has been a recurring feature of the political landscape, driven by comparable forces of populism and Euroscepticism. Much like its French counterpart, the push for Nexit is primarily advanced by parties on the far right. Most notably, Geert Wilders' Party for Freedom, PVV. These groups have effectively tapped into a wellspring of public concern, emphasizing the need to restore national control over borders, curtail financial contributions to the EU, and safeguard Dutch cultural identity from the perceived homogenizing effects of European integration. The Netherlands, with its long history as a trading nation and its pragmatic approach to international relations, presents a unique case. Its economic success is deeply intertwined with the European single market. Yet a strong undercurrent of skepticism towards political integration persists. The core arguments for Nexit are therefore framed around a cost-benefit analysis of EU membership, questioning whether the economic advantages continue to outweigh the perceived losses in sovereignty and cultural autonomy. The key tenets of the Nexit platform are deeply rooted in concerns about nationalism and cultural identity. Proponents express a fear that the ongoing process of European integration will inevitably lead to an erosion of the unique values, traditions, and social fabric of the Netherlands. This sentiment is often linked to the issue of immigration and the belief that EU policies have undermined the nation's ability to maintain its distinct social model. The argument is that a Nexit would empower the Netherlands to preserve its cultural heritage and social cohesion by implementing stricter, nationally determined policies on immigration and integration. This cultural argument, while less quantifiable than economic data, is a potent political force that shapes voter behavior and influences the national conversation. A more tangible and frequently cited argument revolves around the Netherlands' status as one of the largest net contributors to the EU budget. Nexit supporters argue that the substantial sums of money sent to Brussels annually could be more effectively utilized for domestic priorities such as healthcare, education, or tax reductions for Dutch citizens and businesses. This line of reasoning resonates strongly with a fiscally conservative electorate that is wary of subsidizing other member states. The perception is that the Netherlands is shouldering an unfair share of the financial burden of the EU, with limited tangible returns for the average Dutch taxpayer. From an economic perspective, this argument calls for a nationalistic reallocation of resources, prioritizing domestic investment over contributions to the collective European project. Furthermore, there is a widespread concern among Nexit supporters about the centralizing tendencies of the European Union. They point to the increasing concentration of power in Brussels and the expanding scope of EU regulation as evidence of a superstate in the making. This critique posits that the role of individual member states in the decision-making process is being progressively diminished, leading to a loss of democratic accountability and national self-determination. The desire to reclaim legislative and political authority from EU institutions is a central motivation for the Nexit movement, reflecting a broader Eurosceptic view that the EU has overstepped its original mandate as a common market. In the Netherlands, while skepticism towards the EU has a long history, it's particularly evident in the 2005 rejection of the EU constitution. Strong Nexit movements have not yet managed to build the critical mass required to become a dominant political force. Support for Eurosceptic parties remains significant and can influence coalition negotiations and policy debates. But a clear majority in favor of leaving the EU has not materialized. The Dutch economy's heavy reliance on intra-EU trade and the Port of Rotterdam's status as a gateway to Europe create powerful economic incentives to remain within the single market. most of the business community and mainstream political parties view EU membership as indispensable for the nation's prosperity. However, the continued presence of a vocal and substantial Eurosceptic bloc means that Nexit remains irrelevant. If low probability, risk scenario that investors must factor into their analysis of the Dutch market, several common factors are clearly driving these EU-leaving movements across different member states. Widespread economic dissatisfaction is a primary catalyst. In regions grappling with economic hardship, high unemployment, and rising income inequality, the EU is often scapegoated. These economic woes are frequently attributed to the constraints of the single currency, the burden of EU regulations, or the bloc's perceived inefficiency in managing economic crises. For a significant portion of the population, leaving the EU is presented as a panacea for these deep-seated economic problems. Another powerful and unifying theme is the issue of border control. The migration crises of the past decade have heightened security concerns and fueled anxieties about cultural change across Europe. For many, the EU's policies on migration and asylum are seen as a fundamental failure. The desire to regain sovereign control over national borders and implement stricter immigration policies is one of the most compelling reasons why many Europeans feel insecure and are drawn to Eurosceptic movements that promise to take back control. Finally, the enduring appeal of national sovereignty serves as the ideological bedrock for these movements. The aspiration to protect national identity, legal traditions, and the right to self-determination has always been a potent motivator in European politics. In an era of globalization, the EU is often portrayed as a distant, bureaucratic entity that threatens to subsume national sovereignty into a federalist structure. This narrative powerfully appeals to a fundamental human desire for local control and a clear sense of national identity. In conclusion, while the Frexit and Nexit movements represent significant currents of political and social thought in France and the Netherlands, the probability of these core EU members actually orchestrating an exit remains an open and complex question. The path to any such departure is fraught with immense political, economic, and social hurdles that make it a far more formidable undertaking than Brexit was for the UK. For investors and market analysts, however, the immediate likelihood of an exit is not the only variable that matters. The persistent strength of these Eurosceptic movements serves as a crucial indicator of underlying political risk, a potential drag on investor confidence, and a source of periodic market volatility. These movements shape national policy debates, influence election outcomes, and can constrain the process of further European integration. Therefore, a rigorous and ongoing analysis of these trends is not just prudent. It is an indispensable component of any comprehensive investment strategy focused on the European continent. The future trajectory of the EU will be determined not only in Brussels, but also by the evolving sentiments in the streets of Paris, Amsterdam, and beyond.